Hello from Trend Signal for a review of the data and events week beginning the 10th of September. Markets starting the new week on Monday morning, slightly mixed. Far East markets were mixed to lower. In fact, Chinese markets were down quite a lot. In fact, Hang Seng down 1.3, 1.4% on the back of comments from Donald Trump, said that he'd be imposing levies on $200 billion worth of Chinese imports soon, and said tariffs on a further $267 billion of products were ready to go at short notice. Needless to say, headlines like China stocks slump as investors brace for next tariff, and the suggestion is from Reuters that the war will probably be stepping up as China vows to respond if the US takes these next steps. So, but not really affecting UK markets or European markets much. They're slightly lower, but nothing too notable, really. Emerging market angst remains, but no sort of major headlines really, apart from, I guess, the ruble falling on Monday morning, breaking the 70 level against the dollar. And it still carries on, obviously, the emerging market angst, you could call it, or crisis. Nomura's put out a report naming 7 emerging market economies that are likely or potential at risk from an exchange rate crisis. Those sort of ones from Sri Lanka, South Africa, Argentina, Pakistan, Egypt, Turkey, and Ukraine. We know some of those already, but obviously with significant foreign borrowings that potentially will be a big sort of weight round their necks for some time to come. Last week, non-farm payroll headline was sort of close to consensus, although central bankers, I guess, might be pleased that wage growth has started to pick up. Plus 0.4% was the surprise on Friday versus a plus 2.2% expectation on hourly earnings. I say pleased, might be pleased. It just depends what the consequences are if wages continue to accelerate. There will certainly be a little more focus on the CPI data or inflation data, which is due out this week in the US. Painful week in some respects for anniversaries this week anyway. It's the 17th anniversary of the 9/11 attacks in the US, where 3,000 people lost their lives. September the 15th, 2008, is when Lehman's filed for Chapter 11 bankruptcy. This was in the height of the great financial crisis, as it's called, the credit crisis, the credit crunch. Lehman's was the largest bankruptcy in US history, with Lehman's balance sheet standing at the time of $6 trillion. It was a symptom of the subprime mortgage crisis and the accelerating deterioration in the US housing market. I think Lehman's wasn't really referred to as an investment bank. It was known as a real estate hedge fund to a large extent. Anyway, the seriousness of the deepening financial crisis affected every economy, which resulted in a complete collapse in the credit markets and actually the ability to borrow any money anywhere. But of course, the collapse of Lehman's in 2008 was not the end of it. Stock markets didn't actually hit their bottom or their nadir until March 2009. And I remember at the time thinking this feels like it's the end of the whole capitalist system. But in fact, it turned out to be the best buying opportunity in history, as the S&P is now some 430% higher than where it was then. So there you go. They saved the day, those central bankers, somehow. They're still saving the day, to be fair. Right, data and events this week. Let's get on to the calendar. Monday, we've already had the the monthly GDP data. It sort of failed to attract much interest at the moment. Certainly not as much interest as the quarterly data attracts, but a better than expected number of plus 0.3% there. Manufacturing production, though, contrary to the GDP data, came in weaker than expected, minus 0.2%. We have average earnings index on Tuesday. Maybe we can get a nice surprise like the US had last Friday. Somehow doubt it though, but plus 2.5% is what's expected, still potentially below the inflation rate, so not particularly good news. I'm sure the Bank of England would like to see that ticking up, as indeed the Fed were surprised and pleased with the average earnings or hourly earnings last Friday. US PPI This is the producer price index. This is the cost of goods and services going into production. It's sort of regarded as a bit of a leading indicator to future inflation. Weekly crude oil inventories. Well, we had a drawdown last week, but that really hasn't helped the oil market much. Doesn't seem to have any effect they should. Maybe the emerging market crisis angst is acting a bit of a brake on oil prices. Wednesday evening, we have the launch by Apple of new versions, more than one, of the iPhone, a new version of the iWatch, and a couple of versions of the iPad, I've been told. So this 1 trillion behemoth is probably keen to show that it's maintaining a constant stream of new devices with some sort of groundbreaking technology. All seems to pass me by, really, but I still exist with my iPhone 6, which does the job. EU State of the Nation, I've written here. Jean-Claude Juncker, European President, delivers his final State of the Union speech. He seems to have been in the job forever, actually, that guy. At the European Parliament in Strasbourg. To be honest, I never knew that they had a EU State of the Nation, but there we go. I wonder what nation this refers to. Many anti-EU member states, including, it would seem, Sweden now, partly at least, must squirm when they hear this. But there we go. That's on Wednesday. Thursday, back to more important bits of data. We have the Monetary Policy Committee meeting and the results of that meeting. We're expecting 0 chance of any rate move now, so 0.09, no one expected a descent there. The Brexit backdrop makes it highly unlikely that we're going to see any rate increase before the end of next March. March the 29th being when Brexit occurs, when we leave, the UK leaves the EU. Still, the Brexit insults fly. Mr. Johnson's, quite frankly, ridiculous analogy over the weekend. It's been followed by rumours that May intends to stick around for the next general election in 2022. So it really is a cauldron of comments and claims and rumours and all sorts of stuff. But certainly as far as the MPC is concerned, you know, usual story with sterling, UK shares, bonds, all sensitive to the MPC decisions and comments, obviously. We also have the ECB monthly policy meeting. Any rate change almost as unlikely as the UK raising rates, so no change expected. Their press conference at 1:30 normally provides more interest for the markets, obviously, because we don't expect anything coming out at 12:45 on the rate decision. On to other data in the afternoon. We got inflation data from the States, which I mentioned at the beginning. This piece, plus 0.2% expected. Last Friday's jump in average earnings could eventually lead through to inflation, obviously, but it's far too soon for this month. But I think the data will become more of a focus as the days go by or months go by. So, and obviously the dollar is particularly sensitive to this data. It's the core number we're looking at, really, not the inclusive number. Plus 0.2% is what we're looking for there. Friday we finished with Mark Carney for the Bank of England talking at some lecture, I think, in Dublin. I don't think he can do much damage from there, can he? Let's hope not. And then Friday afternoon we've got finished the week. We've got core retail sales for the United States plus 0.5%. It's pretty much in line with last month's. Another positive number as the US consumer continues to spend, unlike some of the consumers here in the UK. That's it. Thank you very much for listening. All the best, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.